Hey everyone, me Kevin here. Well, Bitcoin is facing a big test, and so are a lot of cryptocurrencies this week. Let's talk about that, but also go through some other updates that are going on. Then we'll look at some TA and see what's going on with price action. First, a new study done by the Civic Science Foundation found that 4% of respondents to their survey quit their job because of gains in cryptocurrencies, which is really, really incredible. Of that 4%, they were primarily lower income individuals. 27% of them made less than $25,000, 37% made between 25 and 50K. That means 64% of people who quit their jobs because of crypto were making under $50,000 a year and hopefully have been able to change their lives because of this. This is really cool. This is and congratulations to those individuals. This was also talked about under a headline: 1 in 25 Americans quit their jobs due to gains in cryptocurrencies. That sounds a lot bigger than 4%, but we'll go with it. Anyway, the survey was conducted in the month of October, had approximately 1,200 respondents. Pretty respectable sample size for this type of survey. Remember, sample sizes and statistics are all about trying to find a representative random population. 1,200, not bad for this. But either way, 4% of quite frankly, if we could extrapolate this to represent America, if this was truly a random survey, and if we were able to determine that 4% of the labor force is broadly quitting the workforce because of cryptocurrency, it's worth noting that's about 6 million workers, or about 500,000 workers not going back to work or potentially quitting every single month for a year. So in other words, one of the reasons maybe we're seeing bad unemployment numbers is because crypto has been doing so well. Now, obviously, we're in a little bit of a red moment here with crypto coming off some of the all-time highs that we've recently hit, which we're going to talk about in just a moment. But really incredible survey. Younger investors, worth noting, also much more bullish on crypto than older investors. When asked, do you expect to be wealthier than your parents as a result of your cryptocurrency investments, 18 to 24-year-olds, 21% of them said yes, and only 10% of 35 to 54-year-olds said yes. That means you have twice as much enthusiasm amongst 18 to 24-year-olds than you do between 35 to 54-year-olds. A lot of maybes and actually quite a lot of no, I don't here. Do you expect to be wealthier than your parents as a result of your cryptocurrency investments? No, I don't. I wonder if the no, I don't somewhat represents a little bit of a disappointment in how difficult it has been to buy larger assets for people's household portfolios, usually like real estate, because real estate prices have moved so substantially. But more on crypto, or more on real estate in a different video. Also, by now, I'm sure you've heard that the Staples Center is rebranding to Crypto.com. It is a 20-year deal. It is effective Christmas Day. The Staples Center has been called the Staples Center since its inception in 1999. It'll be the first time it's changed its name. Also, we just had regulatory approval for the selling of $56 million in illegal cryptocurrency from a 44-year-old promoter of BitConnect. Remember that one? BitConnect! Oh, man. We've also got Chinese authorities again this week doubling down on their, quote, full-scale crackdown on cryptocurrency mining. This is potentially leading crypto, specifically Bitcoin, to fall under its $60,000 support line. Let's now talk some technicals. So if we look at some technicals for Bitcoin here, and then we'll look at some price action on some other coins, we definitely have seen Bitcoin now fall under its 60,000 support, and it really slow bled out to get under 60,000. Let's go out to 30 minutes just to compress this a little bit more. You kind of see this over here. This is your 60,000. I'm sorry, this is your 63,000 level here. This is 60,000 right here. So we had a quick drop from about 63.8 to 60. We rubber banded here, but we really had this sort of slow bleed out that stretched out over the last few days here. And then all of a sudden we got a sharper sell-off right around 59,000. And that brings us to where we are now, which is actually under our 58,000 support line. This is a pretty important support line. We've been bouncing off of this quite a bit here if we look at the 1 minute chart, we fell below it. We dropped down and oversold to about 56.6. Now we're bouncing off that 58 line. We're dropping again at the moment at the time of this recording. This 58 line is very, very important because if what we see happen here is the same thing that ended up happening at the 60,000 line, which is we rubber banded around it for a couple days. Let's go ahead and look at this here. Let's zoom out a little bit. Let's go to the 30-min here. There we go. Okay, so we see this rubber band around here. It lasted from November 15th at about 8 p.m., November 15th, 8 p.m. Lasted until about 8 p.m. on the 17th. That's about 2 days of rubber banding, mostly below the support line, creating obviously resistance. Now we are beginning a potential rubber band under the 58 level. If we end up sitting here for a couple days and we can't keep it up over 58, personally, I believe that we are heading to 54,000. Now, the 54,000 support line is not a very strong support line. We have a much stronger support line at 47,000 with 47,100 and another one at 46,800, which really gives you a strong region of support right around the 47,000 level. This is a strong support line. I'm not thinking that we're going to be able to see a dip to 37,000 unless we saw some substantial liquidations, which is possible. The liquidations could go up if we did run to about 47,000. But I do believe that there is a good chance that there is a next stop for Bitcoin at about 54,000. I'm not sure if we're going to push down past that support line, but we'll see how price action is here. But right now, the fact that we can't get back over 58 over the last sort of 2-3 hours here is something to pay attention to from a technical point of view. Now, if you look at Bollinger Bands, right now we are obviously we're at a relative low in terms of Bollinger Bands. I like to use TradingView to look at Bollinger Bands, but it's worth noting that these will stretch with price action. So as with all technical analysis, there's always a downside to some TA. We did see right here, historically Bollinger Bands always work better, as almost all TA does. But anyway, we did see a bounce off of the Bollinger over here at about that 56.6 level, although we're starting to see these compress a little bit here, which could be a good sign that we're going to kind of stay at 58, hopefully break out over 58 and push back over 60. That would be best case scenario. But if we do continue to get some negativity and some FUD, whether that's out of China or it's because of Bloomberg's notification on their expectations that a Bitcoin spot ETF is nowhere near close, then we could potentially go down to that 54,000 level, and then these Bollinger Bands will obviously stretch down. So when I hear folks talk about Bollinger, remember it's all part of much more TA and the news cycle. The big news piece, though, is, in my opinion, what Bloomberg announced this morning. We covered this live when the alert came through the Bloomberg terminal. The notification had to do with the Bitcoin spot ETF, which would be a way for potentially trillions of dollars to flow into the cryptocurrency markets for people to, in a low-fee, lower risk method, be able to buy cryptocurrency. Now, of course, most cryptocurrency hodlers are much more interested in holding their own coins themselves, which I am as well. In fact, I generally like to buy my coins on Coinbase Pro because it has the lowest fees, and then I could transfer those to areas with higher fees. However, I have to say I'm very frustrated recently with Voyager Digital because I transferred about $1 million. It was more like $900,000 to $1 million over in cryptocurrency to Voyager Digital. And then I wanted to send my cryptocurrency from Voyager Digital back to Coinbase Pro to do some trading, but I couldn't because I was limited to a $25,000 per transaction limit. So kind of frustrated by that. I'm sorry, per transaction is $250,000. You could trade $250,000 within Voyager, but if you want to withdraw from Voyager to trade, because they make their fees on their massive spreads at Voyager, you can only withdraw $25,000 at a time. So I was very, very disappointed about that. Not happy. I feel like I kind of got Chinese handcuffed, where it was easy to go in, hard to go out, right? I don't like that. But anyway, obviously a spot ETF would make a lot of cryptocurrency trading and speculating a lot easier. We would expect massive inflows into the market. And the market has recently been pushing cryptocurrencies to new highs in anticipation of an ETF getting approved. But the SEC has essentially thrown up its hands, suggesting that they don't believe that a regulatory agency or a self-regulating agency like exchanges or whatever will be able to prove that a spot ETF will not be manipulated or used for fraudulent purposes until there's some form of new law or legal framework. And the SEC can't create that new law or new framework. Congress has to do it. So we might actually be waiting for Congress to act on a Bitcoin ETF. And quite frankly, I think before Congress acts on a Bitcoin ETF, we're probably going to end up seeing cryptocurrency regulation on stablecoins, which could potentially be short-term FUD, followed by then hopefully regulatory action on an actual ETF, a spot ETF. Remember, a spot ETF would track pricing for Bitcoin much more closely compared to a futures ETF, which we have now, which came out with a lot of fanfare. We've got billions of dollars in assets under management in some of these futures ETFs. But these are dangerous. These are expensive. Bloomberg's estimating you're probably looking at 10% in annual fees. Just because of backwardation and contango and the way futures contracts roll. You're pretty much getting a bad deal if you're buying the Bitcoin futures ETF to buy and hodl it. Of course, if you're interested in buying and hodling, in my opinion, the best thing to do is just buy coin and hodl it. I am a cryptocurrency trader. I am very, very passionate about trading, and when I see momentum going in a certain direction, I like to trade. Anytime I do trade, I send alerts, whether it's in stocks, it's in options, or it's in cryptocurrency. Anytime I trade, I send notifications in my Stocks and Psychology Money group, which remember, you could use the Black Friday coupon code link down below for that. Generally, I am looking for trades on a day to a week basis for my trades. So somewhere in that range where I'm looking to do trades between, I would say 1 to 14 days is usually where I like to trade. I'm not much of a day trader, so intraday I generally don't trade, so I'm not spending too much time on the 1 or 5 minute candlesticks. I'm generally looking at longer trends and trying to capitalize on those and longer support trends. So it just kind of gives you a little bit about my personality for trading. Now, also bear in mind, I only trade with about the latter 5% of my portfolio. I like to keep a lot of my portfolio in long, high conviction plays that I have. Very long, high conviction plays that I have are going to be things like Enphase, Etsy, Tesla, Affirm, whatever. These are very long, high conviction plays. And soon to be NVIDIA when I can buy that darn thing on a dip. I've only got a small portion of my portfolio in NVIDIA, and I wish I had more, but I'm going to wait for a dip to buy. With cryptocurrency is a pure trading tool for me. I love it. I believe in blockchain long run substantially, but I do regularly trade crypto, so I enjoy that. But anyway, this gives you a little bit of insight into what's going on. I do believe that it is very possible that we're going to see this 54,000 number. If I had to put odds on it, if I looked into my crystal ball and I had to put odds on this, I would probably say that we have a good chance of hanging out at 58 for some period of time before breaking down to 54. Odds of breaking down to 54, I would say probably somewhere around 70%. So that's kind of looking at my crystal ball and roulette table. Probably about 70% that we're going to go to 54. I would probably only estimate that we're around 20% chance of actually falling down to 47, though that's possible depending on how we end up trading over here at 54. And probably only about a 5% chance that we revisit the 30s within the next, probably within this year. So I would say within the next 6 weeks. Substantial chance of revisiting 54, much smaller chance of revisiting some of the lower numbers here. That's just my belief. I do think that there is, though, out of that, if 70% chance of going to 54, I do think there's probably a 20% chance that we end up back over 60,000 and stabilizing over there. Maybe a 5% chance that we just end up channeling somewhere in between here. Those are just sort of my beliefs. I do think we'll end up going in one of these directions. We'll either get back to 60 and above that, or we'll go to 54K. So if you believe that we're going to go down to 54K, there could be an opportunity to sell your cryptocurrency investments and rebuy them. Though remember, this does carry significant risk that you could end up missing a sudden breakout. So that is something you have to be aware of when you're a trader. You can miss breakouts. That is the nature of trading. So these are some of my thoughts. I will say Voyager Digital has ran substantially. I am completely out of Voyager Digital. It's worth noting that. Again, anytime I send buy-sell alerts, I send them in the Stocks and Psychology Money group link down below. But I do believe that one of the reasons Voyager ran substantially was on Shiba Inu momentum, because you could buy SHIB on Voyager when you couldn't buy it anywhere else. I am still very optimistic about Voyager's Coinify partnership. I still haven't made a video diving into directly why I'm bullish on that. But I am still frustrated by some elements of Voyager that I've been experiencing over the last couple days, specifically limits on being able to transfer out, and relatively slow customer service to potentially extending my limits, as well as very high spreads when you're buying and selling. So if you all of a sudden want to pop into Voyager and you're like, oh, I want to sell because you want to trade, you're stuck because you're paying large fees. If you want to get back to Coinbase Pro, you've got a problem. So if you are a trader, you're probably best hanging out on Coinbase Pro, or and I know this pisses a lot of people off and they roll their eyes at this, but honestly, if you're a trader and you want literally the best fees and you do not care about staking or actually having your keys, and you're just speculating, Robinhood. I know that sounds nuts, and I'll probably get chastised in the comments for that, but they beat everyone's fees. And I'm not trying to shill Robinhood. I'm not very happy with Robinhood. I have a lot of disappointments for Robinhood. If I were Robinhood, I would be doing things very, very differently. But I do think there is a very short-term trading opportunity here in crypto. I'm bullish on crypto for the first part of 2020. I will be tracking inflation expectations, though, and inflation results, because I do think that once inflation expectations wane, there is going to be some selling pressure on crypto. However, we may have rallied substantially before we ever even get to that point. So anyway, these are some of my thoughts on crypto, the market. Check out the Black Friday coupon code down below. And folks, we'll see you in the next one. Thanks so much. Goodbye.